tell you what, this is how we're going to end our Friday over here anyway. You got the Dow up 28 points. We're slightly higher, but look, it isn't what we had yesterday, which was a really rough and volatile market day. It looks like we're going to be down for the week on the market. Sorry for the downer, but we're watching Europe, the central bank agreeing to buy more bonds in hopes of reining in the debt crisis over there. Over here, the super committee deadline is fast approaching and the rhetoric continues. The push is on in Congress to legalize and tax online gambling. We've got a live report from Washington for you. Well, hello, everybody. I am Cheryl Casoni, and joining me for the hour today, I got two of my best, my brightest, James Frischling, co-founder and president, NewOak Capital, and Barron's online stocks editor, Bob O'Brien. A lot from both of them coming up, but we begin with you. Okay, Gary, stay with me. I want to go to Jim Frischling because, Jim, last time you were on the show, you were talking about, a lot of big dividend payers, really like some of the big growth picks that you were seeing. Having said that, this week in particular, a name like Walmart, one of the staples of many portfolios, saw pressure. What are you seeing right now? Do you like what you're seeing with regards to earnings?
I mean, over 70% of the companies that reported had beat their estimates. I think 73%. I think that's a positive sign. I think the economic data you mentioned also gives me a sign of confidence. So I think equity trading clearly is brutal. The volatility is difficult. But long-term investing, I think, is, as legendary investor Mr. Buffett pointed out, you can still pick some very good companies, some good with good fundamentals, global distribution channels, and dividends is a theme that we've been going with. Okay. So we I recognize the headwinds that are faced in this market, and they're truly significant. But still thinking there's some interesting opportunities to deploy capital.
Bob, kind of same question to you. You've been reporting on earnings. You write about it for Barron's. Are you surprised by what you've seen? Some of the misses have actually been big misses.
Yeah, some of the misses have been big. And the thing I worry about going forward, Cheryl, is a lot of the outperformance for multinational companies is coming from sales abroad. Europe is obviously a big consumer of U.S. goods, and are we going to see a pullback if the austerity programs in Europe cause the economies there to go into a recession? Is that going to hit? Are the emerging markets going to be able to pick us up?
I'm glad you brought that up because, Jim, you like emerging markets. But I just want to point out really quick, and I know you like them, but this week actually is the worst week for emerging markets since September overall. We're seeing a drop in emerging markets. But you've been a big fan, so.
I've been a big fan, and again, I'm under a lot of pressure, but I'm going with they're cheap, particularly Brazil. Okay. And we're looking at, Brazil ETFs, which are trading at, I guess, 8 times, the market's earnings and offer a over 6% dividend yield. So again, looking at that story, going to stick with it right now.
Okay. Luck be a lady online, but only if it's legal. Congress rolling the dice to debate whether or not online gambling is a good bet for the government. Peter Barnes joining us now from Inside the Beltway. So, Peter, who stands to benefit from legalizing online gambling?
Well, obviously, brick-and-mortar casinos, Cheryl, which up until today have opposed online gaming. But today, the American Gaming Association, at this hearing on Capitol Hill, announced its support for taking the very first step towards legalizing online gambling, starting only with online poker licensed by the states. The industry estimates that despite the federal ban on online gambling in 2006, 10 to 15 million Americans gamble billions of dollars online, mainly through offshore websites. That's a big market.
Okay, so how much revenue could this bring in? And I'm assuming we're talking about tax revenue here, correct?
Yeah, that's right. Estimates range from $1 billion to $4 billion a year in potential federal tax revenues, which makes this an attractive jackpot. Sorry, had to do that. For lawmakers, for lawmakers scrambling to find revenues to help shrink the deficits. So it's giving the legislation some traction.
Well, I'm curious what opponents say about this because Jim Frischling, Peter, was bringing this up during the commercial break that he was saying, look, Indian casinos are going to be very opposed to this. I'm wondering if they have a voice in all this yet.
Yeah, well, no, they're part of the brick and mortar casino industry that is now supporting this. But casinos themselves, they remain concerned about fraud, money laundering, young people gambling online, gambling addiction. And there are some lawmakers who still worry about this on moral grounds. They say that, gambling in casinos or in cyberspace is just plain immoral.
Okay, well, Jim, from a stock perspective, though, is somebody like an MGM who does support it, are they going to gain market share from something like this? Is there a possibility?
There's a give and take. Obviously, if you can do it online, you might be less likely, let's say, to travel. But I think I believe what the folks are recognizing is Americans are gambling online in massive numbers. And without a change in the way we do it here onshore, this is unregulated, and the money is clearly just not benefiting the U.S. So.
and I tell you what, Bob, we're looking at the casino names. If
Yeah.
you look at Wynn in particular, they put so much of their jackpots. Get it? I keep dealing with this today.
How can you
But they're putting so much money into China because the gambling is so intense there. But what's different about Macau in particular is that it's just straight gambling. It's not about the shows, not about the alcohol. They are hardcore gamblers over there.
Yeah,
Maybe
and so-
there's more of that in America.
And that gives them good experience with this sort of a platform where they're not giving you all the ancillary services. You know, I'd also look at some of the gaming technology companies like a Bally or an international game technology, WMS. They've all tried to go to internet-based platforms on the casino floors, but it's been a very slow introduction because the casinos simply aren't spending on infrastructure right now. But they'd be set up. So you have a WMS Industries, which would be poised to introduce an internet-based platform that you could use from your home, and it would be a boon for them.
It really is amazing. What's even more amazing is that they didn't do the Keystone Pipeline, which would have resulted in 20,000 construction jobs right there, plus a flow of oil from Canada to the United States. And we're talking about how to be independent from these evil Arab producers. Well, here, Canada, our neighbor, wants to sell us oil. We've turned down that pipeline. And we're pouring money into wind turbine solar, which are made in China. And we're not helping ourselves in that way. We're making our cost of energy higher.
So, Jim, we're not making the panels, for instance, when she's bringing up a great example with solar. We're not making the panels. Nobody's using the panels. Solar has still not really caught on, and yet we canceled the Keystone Pipeline this week. I mean, what's your take on this?
It's a tragedy.
I mean,
it's a tragedy.
I mean, we're kind of stuck between a rock and a hard place. You're right. Many of the existing programs aren't working, but something does need to get done. And I keep pushing this theme of public-private kind of partnerships where, you know, I was reading a story about a federal grant actually started an interesting, very green company, NBA Polymers, that, you know, basically finds ways to recycle computers and appliances and ultimately convert that into new plastic, except the company was started here and then taken overseas to China and Brazil and India, where they have, I guess, or certainly China has a better Clean Energy Act, and found that it was easier to operate that company from a regulatory standpoint overseas. So again, we have to find the combination that really works. And again, right now we don't have it, so I can't necessarily support the existing programs, but I also know that abandoning them completely is not going to work either.
And Bob, at the same time, from a stocks perspective, if I'm investing right now, I'm thinking to myself, I might as well just go buy a Chinese solar stock versus a U.S. solar stock. And if you look at the solar sector that is public, the market is rejecting those stocks week after week. They're all down.
Well, and Cheryl, this shows you the folly of the government trying to be in the economic forecasting business, which is part of what they're doing here. And what the government didn't do with Solyndra and all of these solar panel companies that they were supporting was anticipate the marketplace reality that the Chinese would come up with a much less expensive product that would flood the market, drag down prices, and make the U.S. companies uncompetitive with their Chinese counterparts. And that's why the market, why investors are flocking to these Chinese companies and rejecting the U.S. companies.
And,